The big news of the week continues to be the Sam Bankman-Fried FTX debacle. In fact, as more and more evidence comes out, they've got the guy who ran the Enron bankruptcy restructuring, who is now in charge of FTX. And this guy said he has never seen anything like this as far as the degree of fraud and mismanagement. And this is coming from the guy who took over Enron. And this is much worse than that. In fact, a lot of people were saying maybe this guy is a mini Madoff. He's not a mini Madoff. He's bigger than Madoff. And he made off with everybody's money. That's the problem. But at this point, enough evidence has already come out. And this guy and probably a lot of other kids who were working with him are going to end up facing criminal charges.
In today's video, Peter Schiff, founder, CEO and global strategist of Euro-Pacific Capital, and a prominent Bitcoin critic, warned all investors to be careful about Bitcoin. He believes that Bitcoin price will go down even lower. Peter gives a warnings about the recent mass panic triggers $1 trillion crypto price crash and short squeeze warning, as FTX's FTT goes into freefall, dragging down other cryptos. The drama between FTX and Binance have worried the Bitcoin and crypto community, who fear the clash will spill over to the wider market. Fears of contagion from the public spat between Binance and FTX have gripped the cryptocurrency market, resulting in an aggressive sell-off in FTX's token, FTT, as well as Solana, which is one of the largest holdings of FTX's principal trading firm Alameda Research. This continues to unnerve traders in a space so driven by sentiment. Before listening to him, please ensure to smash the like button and subscribe to the channel.
A lot more downside is coming in cryptos. It's amazing to me that Bitcoin is still at 16,700 or wherever it's trading. That's where it was the last time I looked. But it should be a lot lower, and so should all of these tokens. Now, they will be lower. Right now, a lot of these hodlers are like deer in a headlight. They have no idea what's about to hit them, and so they're kind of frozen there, but they're going to get run over by a Mack truck. And in addition to all these lawsuits and just the implosion of FTX and all the companies that were counterparties to this company and that are being dragged down in its wake, you're going to have the fact that all of these people that work for all these tech companies are going to be laid off. Now, I've been talking about that for months and months on the podcast, particularly the layoffs that are coming in the blockchain and the crypto space, because I knew that not only would a lot of these companies have to lay off workers to cut their burn with a rising rate environment where people don't want these risk stocks anymore, but I knew that a lot of these crypto companies were going to go bankrupt. And some have and more will, which means all these workers are going to get laid off. And chances are most people working in crypto drank the Kool-Aid. They were in crypto because they believed in crypto. And so they probably have most of their net worth tied up in cryptos. And so what happens when they lose their jobs and they no longer have an income? How are they going to pay the bills? Well, they have to sell the only thing they've got, which is their cryptocurrency. Whether it's Bitcoin or something else, they have to sell to buy stuff. And by the way, the stuff that they need to buy is getting more and more expensive because of inflation, and the cryptocurrencies that they have to sell are getting less and less valuable. So the price of the stuff that they need to buy is going up, but the market value of the cryptocurrency they have to sell to buy it is going down. And so that's making it worse because your inflation rate is much higher if you're pricing stuff in Bitcoin or another currency that is falling as the price of the stuff that you need to buy is rising. And so I was talking about all this extra selling pressure that is going to come from unemployed former blockchain crypto company workers who now have to sell their stack in order to pay their bills. The big news of the week continues to be the Sam Bankman-Fried FTX debacle. In fact, as more and more evidence comes out, they've got the guy who ran the Enron bankruptcy restructuring, who is now in charge of FTX. And this guy said he has never seen anything like this as far as the degree of fraud and mismanagement. And this is coming from the guy who took over Enron. And this is much worse than that. In fact, a lot of people were saying maybe this guy is a mini Madoff. He's not a mini Madoff. He's bigger than Madoff, and he made off with everybody's money. That's the problem. But at this point, enough evidence has already come out that if it looks like a duck, it walks like a duck, it quacks like a duck, it's a duck. And this guy and probably a lot of other kids who were working with him are going to end up facing criminal charges. When it comes to running companies, being the CEO and the CFO, if you got a bunch of 20-somethings who are running a supposedly multi-billion-dollar operation with no real adult supervision, people that have real experience aren't there, you're bound to get something like this. But I don't think it was just that these guys lacked experience. They were actually stealing this money. I don't believe that they didn't realize that what they were doing was theft. What they did, if you haven't already learned about it, they were taking the money that their customers were depositing into their FTX accounts. And they were taking that money, and in many cases, it wasn't even money anymore, it was tokens. They were taking their tokens over to Alameda Research, where they were speculating in crypto and losing because cryptocurrencies have collapsed. And so they were probably on the long side of that market, given what everybody believed for crypto. And so they basically embezzled this money, which is really what it's doing, because you don't have permission. In fact, they're representing to their customers that they're not doing that. Yet that's exactly what they were doing. But then they took that money and they gambled with it and then lost it. But even if they hadn't lost it, that wouldn't have made it right. They may have gotten away with it if they could have taken the money, gambled, made money, and then returned it. But that's not the way it happened. In fact, if I were to guess the way things went down, they probably initially thought, hey, we could take some of this money. No one's going to notice it. We're so smart. We're going to trade it. We're going to make a bunch of money. And then we'll put the money we took back and nobody will know. No one gets hurt. And we can make all this money. Except the trades didn't work out the way they thought. They ended up losing money. And then they were probably thinking, okay, well, now we need to steal a little bit more to make back what we lost. And then we'll put the money back and everybody will be fine. And they kept losing more and more. And they were digging themselves deeper and deeper into a hole to the point that they had no choice but to keep digging, because the minute they stopped, the whole thing would collapse. And so at that point, they were desperate. Their only chance was riskier and riskier bets to try to get out of this hole. And of course, they only ended up in a deeper hole. The more money FTX would make, they would actually take tokens out of circulation. But in the meantime, I don't know if there was a limit to how many tokens they could put into circulation. So they literally could write their own checks that nobody was cashing and then pretend they had real money. But then worse, they were borrowing against that fake money and they were levering it up. They were saying, hey, we've got this collateral, which basically is our own tokens, our own IOUs. And they were able to borrow money against that. And of course, when the value of that token imploded, which is exactly what happened, there goes all the collateral for those loans. If you look at the high price of the FTT token last year, it was up at $73.50 at its peak. As I'm recording this podcast on Thursday evening, the tokens are trading at about $1.50. And so that's a 98% decline. But the real value of these tokens is zero. Why are they not at zero? The whole thing was a fraud. At this point, it's now a meme coin, because getting a discount on FTX trading is meaningless. There is no more FTX trading. Your money is frozen. You're going to be lucky if you get any of your money back if you had an account at FTX. So there's no value in these tokens to the extent that they ever had any value. There's no reason to even believe they have value, yet people are still paying for them. I'm not sure what the market cap is. At $1.50, it's several $100 million. But why are these tokens worth several $100 million? They're not worth anything. But again, none of these tokens are worth anything. I guess now it's a meme token, just like Dogecoin or Shiba Inu or some of these other ones. I guess it's exciting to own the token of a bankrupt company, a company that may, in fact, be the biggest Ponzi scheme in U.S. history, the way it was run. This is a bigger fraud than Madoff. I think it's a bigger fraud than Theranos. The most amazing thing, though, is how many supposedly sophisticated people fell for his con, because that's really what it was. He was a con man. His whole persona was an act. The idea that he was this compassionate billionaire who was giving away all of his money and spent none of it on himself. Everybody wanted to be around this guy. Everybody wanted to invest with this guy, and he was conning them. Nobody bothered to look beneath the surface of this facade, because if anybody did, they would have seen immediately all these red flags. Look, I wish I had bothered to take a closer look at Bankman-Fried. It never dawned on me to research him at all. I had never even seen any of his interviews until after the whole thing collapsed. I only knew his name, and I knew that he was supposedly this billionaire and he was giving away a lot of money to political candidates, but I really didn't look into him. But whenever I confronted one of these guys, like Alex Mashinsky, he was the founder of the Celsius network that has already collapsed and filed for bankruptcy. I didn't know about him until I had this debate with him. And the minute I had a debate, I knew he was a fraud. And I said, you're running a Ponzi. And of course, his whole Ponzi scheme already imploded. Had I ever had a debate with Bankman-Fried, I would have immediately come to the same conclusion. In fact, had I spent 10 minutes doing even superficial due diligence on this guy, I would have seen so many red flags, I would have run. I never would have given him any money. But because I never even considered putting any money in, I never looked at it. But think about all the people, like Kevin O'Leary is one of the guys out there that was a big investor. And now, of course, he's demanding that the government protect him from making future mistakes. This guy's supposed to be sophisticated. He's one of the sharks. He probably did more due diligence on some of these contestants on Shark Tank, where he's given them money. He probably knows more about these Shark Tank contestants than he did about Alameda or FTX or Bankman-Fried, because there's no way that this guy could have actually done any homework whatsoever and given him money. It's just that people didn't give a damn. They wanted to get in on it. It was exciting. He was the talk of the town. Everything was going up. Everybody wanted a piece of his action, and nobody wanted to question it. Everybody was just lucky to get in because this was a mania. This was gambling. Nobody did any research. And in fact, the signs were so obvious that this was a scam, yet there was so much pressure to ignore what should have been obvious. And a lot of people are saying, with the benefit of hindsight, it didn't take hindsight. Anybody could have seen this. This wasn't hard. Again, the only reason that I didn't see it is I never even bothered to check. But if I was considering investing money with him, then I would have checked, but I didn't. But think about how ridiculous all the people who did check into it look, or pretended they checked into it and just invested blindly. If so many smart people in the crypto space could be so wrong about Bankman-Fried and FTX, maybe they're wrong about a lot of other stuff. Maybe they're wrong about everything related to crypto. The fact that they were so easily fooled by this con, maybe they were easily fooled by the entire con. Maybe everything about crypto is a fraud. But maybe Sam Bankman-Fried and his FTX empire was the biggest fraud, but it's all symptomatic of everything that's going on in crypto. And it should call into question the judgment of all these people who are drunk on the crypto Kool-Aid. They were so drunk that they were fooled by Bankman-Fried, but they were fooled by everything. The whole promise of crypto and Bitcoin is wrong. It's based on a lack of understanding of money and economics, but this is an example of where a little bit of knowledge is dangerous, because the people that got into it had a little bit correct when it comes to fiat currency and central banking, but then they misunderstood gold and they believed that you could replicate gold artificially with a string of numbers. I called it fool's gold. These were modern day alchemists, and they bought their own bullshit, and this is the result. But what's going to happen now is the rest of the investment community that initially looked at these people as some kind of cutting edge geniuses that were on to the next big thing, the next internet. And this really shows how foolish they are. And it's going to make it much more difficult to fool more institutions, even retail investors, to get into this thing, which is why it's going to implode. Because the only way that you can keep a chain letter going is with more chain. The only way a pyramid scheme keeps going is if you have more people, right? It's the greater fool theory. Well, there are no more fools. this is exposing that the fools are the ones that bought into this nonsense. And so now if you're still holding your crypto or your Bitcoin, then you're the greatest fool. There are no greater fools, and you are the bag holder. Also, another aspect of this that I've been talking about for a long time is that all the people who made money in crypto, including the people who pumped it up, in fact, especially the people who pumped it up, I've been saying for years, they're going to get sued. Because whenever people lose a lot of money, the lawyers always show up. These guys smell blood, they're chasing ambulances, and there's a lot of dead bodies now all around from crypto, especially right now, the people who were invested in FTX, and the lawsuits have already started.